And what's interesting is to see that we'll call it the industrial institutional side. So it's either large industry and or institutional investing is driving the market.
This is Kaiser Johnson with Liberty and Finance. Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty or St. Gaudens with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for MS62 numismatic Liberty or St. Gaudens at no extra cost. Call us for details.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and back with us today is our good friend David Morgan from the Morgan Report. David, thank you so much for joining us today.
Elijah, it's always good to be back with you. Thanks.
Well, it's great to have you today. I wanted to discuss, what is happening in the precious metal markets. Over, I guess, the past year, we've seen gold move up almost 50% here. So obviously, we've talked about this on the show before with you, but I wanted to get your take on this latest move to all-time highs. And we're seeing on Friday, as we record this, the 14th of February, a little bit of a pullback here, but your take on what's happening.
Well, we've had a great run last year, 2024, as you just said, and then it has certainly spilled over into 2025 so far, halfway through the month of February. And I was pretty accurate in 2024. I predicted about a 30% move in both metals, and that's approximately what we got, round numbers. This year, I kind of expect the same thing long term. So, 30% on top of, whatever number you choose at the end of the year for gold or silver. And you can take those numbers pretty much by forecast. So like 40 in silver as an example. I don't think it's going to trade at 40 and above, for half the year. I think we may see that print a few times. But coming back to your question, so far so good, strength. But I actually think we're overbought in gold and all the sentiment is bullish. And I'm certainly thinking higher prices, as I just stated. But for the record, I think we could get a pullback here fairly soon. The reason for that is sentiment, technicals, and also there's a propensity in all the futures markets and all the commodities to resist round numbers. And the round number for gold is 3,000 USD. I know we're at 4,000 and beyond in Canadian dollars, and many other currencies were at all-time highs. But the dollar is the market that's watched by most. And that number of 3,000 may not be breached the first time through. It could, but I wouldn't be surprised to see a little bit of cooling off. Really, all the good news is sort of out there. I mean, as we discussed last time, we talked about what's going on in the London markets with fear of the tariffs, and then that spilt over into repatriation of gold, how much gold has moved from London into New York. And so that's where I'm at. I can be a contrarian within the contrarian community at times, and I guess that's where I am right now.
No, when it comes to what is happening with London vaults, I thought that story was quite interesting. People have talked about how this may be kind of the COMEX running out of gold and it being shipped from London there. But your take on what is happening? It seems like millions of ounces are moving from London to the United States. Some people are blaming it on potential tariffs. Why do you think this is happening?
Well, both. I think this tariffs is definitely what started the run to gold. And there's an arbitrage opportunity where you have a differential between London and New York. So if you're going to cover your short and you have the physical metal there, you have to have it shipped in order to accomplish that. And that's what's been taking place. Will we get a big rollover in the subsequent months? Yeah, I think we will. We've seen this happen a few times before, not to this level, at least to my recollection, but usually everyone gets very excited. Everybody gets on one side of the boat. And then as the days and weeks roll by, it subsides. I think that's probably the most likely case, but it's yet to be determined. Further, the gold markets is a much more vast market than the silver market. It's deeper. And you've got a lot of central bank holdings. So let's say for an example, or as a thought experiment, there was a bullion bank that was behind the 8 ball, so to speak, and they needed a delivery. It wouldn't be surprising at all to see a swap take place with the central bank, take the physical gold, put it into place so there's no, problems, and then that swap will later be paid back either in paper or metal itself. I'm not saying that that's a given, but it's certainly happened in the past and certainly could happen in the future. And because, again, gold market is pretty deep, you have a better opportunity for that to take place than you would in the silver market. But regardless, both of those markets do have, let's say, a tight-knit community that can work together at times.
Now, the difference here also just in the price action is silver is still below all-time highs, about 40% or so. Do you see that changing here? It seems like a lot of people have been pointing out how gold has been making all-time highs after all-time highs, but silver really needs to catch up here, even though it has performed very well in the last year, pretty much the same as gold. It's still 40% below that 50 level.
Silver has been disappointing. I mean, if we look no further than the gold-silver ratio, that tells us the story. And because gold has made so many nominal new highs and silver has not, and the gold-silver ratio is well above 80, that's just suggesting that silver's lagging, and it is. I think it's not only has it underperformed, say maybe last year where it's been a little bit better than gold, but I do think it'll catch up. I mean, it's not untypical for silver to fall behind, let's say, gold's lead, and all of a sudden it takes off and it definitely catches up and overpowers gold on a percentage basis. That's what I do think will happen. I'm not sure it'll actually happen this year, although it could. I do think that this year silver will outperform gold, but not in a real substantive way. So, for example, if we got the gold-silver ratio to 70 this year from well above 80 right now, I would consider that a win. I started the Silver Investor website and rebranded the Morgan Report many years ago. But at the time I started the first website, the gold-silver ratio is about 80 even. And really, Elijah, at that time, I thought that would be the highest gold-silver ratio that I would see from the year 1999, 1998 when I started the website until present. Obviously, I would have been wrong. We've seen well over that, not only recently with gold making new highs, but you go back to when the illness broke out in March of 2020, and we saw really, for my records and many others, probably the all-time high gold-silver ratio, which is over 125 to 1. It didn't last very long. It was a spike. I actually was lucky enough to buy silver within a few days of that actual high gold-silver ratio, meaning you were getting a lot of silver for your gold if you were swapping, or a lot of silver for your fiat at the time. Point I'm making is no one knows more than the market. But even though it looks rather bleak, and I'm disappointed as many silver investors, the game isn't over. The end game isn't here. And silver is a very tight and very small market, and it's able to move up and down faster than the gold market. So I probably said enough, but I do think that if you're disappointed, it wouldn't be the time to sell now. I think going forward, silver from this point forward will outperform gold, maybe not on a daily basis or even a weekly basis, but on a monthly basis and on the broad market basis, wherever we end up on the highs of these markets in terms of US dollars. I think once that's achieved, you can see a gold-silver ratio probably at least about 30 to 1. The reason I say that is that we've already been to 33 to 1 gold-silver ratio when we had the financial crisis of 2008 and silver got below $9 and it went up 550%. It went from under $9 to roughly $50. Gold did a little better than a double, if I recall correctly. So silver certainly outperformed gold in that move. And I think we're going to re-witness something like that again. So it's not the time to give up on silver.
And it is interesting. I mean, there's been stories for so long about gold and silver manipulation, right? And it seems like a lot of people are talking about, as I mentioned, this move from London to the COMEX, maybe signs that the manipulation is ending. Another thing that is really interesting that I'm seeing on the retail side is that premiums are super low, but the spot price continues to rise. So what's happening in that regard? Is this like the end of the manipulation where it seems like even the insiders are moving in and maybe the retail public isn't buying as much and even selling back a lot? But I guess focusing just on that retail versus, the action on the major exchanges, what is happening there?
Yeah, you really said it, Elijah. I'll just elaborate a bit. So there's really two markets. When I say the silver market or the gold market, I'm talking about the derivatives market, which is the price set by the COMEX. And even though it's the price of a derivative, all of the prices gear off of that price. So in the retail market, that's a separate market from the futures markets. And that market, which is substantive, does not set the price in the futures arena. The futures arena sets the price in the retail market. So if the retail market is very tight, then you will see huge premiums like we saw not that long ago. I mean, Miles Franklin and on all the dealers were selling Silver Eagles at, I think at one time, like a $14 premium or something, because that particular market was extremely tight. Lots more buying than selling. Now we have the opposite. Most of the retail market, it's you and I, it's the stackers, it's individuals that buy silver and gold, have basically got all they want, or they've got to pay a bill, or they've given up, or any combination of reasons. And they're being net sellers, basically, and there aren't much buying in that realm. On the other hand, when you look at the derivatives market, which usually isn't used as a delivery mechanism, it has been. You've been seeing the silver moving out of the SLV as an example, silver moving again from London, New York, and then delivery taken out of New York. We've seen a lot of movement in the physical in that market, meaning 1,000-ounce commercial bar market in silver and the kilo bar, 100-ounce bar market in New York and London usually has 400-ounce bars, which could be converted to 100-ounce bars. So regardless, it's something that's very different. Most of the time we're really, even though we use the word silver, we're talking about the retail silver market. But really, I mean at all times the derivatives market. Same thing with gold. And this is the distinction between the two. And what's interesting is to see that we'll call it the industrial or institutional side. So it's either large industry and or institutional investing is driving the market. And that's really the purpose of the futures market. So we're really in a place that's kind of where it started out, meaning that instead of the tail wagging the dog and the derivatives price determining how much silver ebbs and flows, we're in a position now where the actual physical market, at least greater than normal, is setting the price out there. And that's why you're seeing this arbitrage opportunity and potential for backwardation where you have to pay more at spot price at today's price than you would in the near futures because it's demanded right now. And so it's very interesting to watch this unfold, Elijah, because that's the true market. And if that market were to break, then it would be most interesting to see what the authority figures would actually do. Technically, and for the record, you can never default on the COMEX. The reason being is the contract says that a cash settlement is final settlement. So for an example, if someone stood for delivery and they were given a check and said on metal, 1,000-ounce bars, there's nothing you can do about it. You've already agreed when you signed your futures contract, be you, a speculator or a large institution, regardless of the same contract, the same rules apply, and you couldn't whine, cry, or do much about it. You might post it on the web and say, hey, I wanted to stand for delivery, but I got a check instead. But if you know how the market works and what the rules are, you kind of have to blow it off and say, well, you're the one that knows you're going to get paid one way or the other. And then that's it. Now I would say there's exceptions to that, but if someone demanded delivery through a refinery, for example, which is a hard contract for physical and physical only that was outside of the futures market, be it either the over-the-counter market that's opaque and no one really knows about it. I didn't know about it, but we don't really know all the details, or the COMEX, which is very transparent. At least they publish all the numbers, whether you believe them or not, they're published. And that market, you can make a determination based on a non-delivery, for example.
So it seems like something has fundamentally shifted in some regard. It's the physical market more determining the price. And this is what so many people have been talking about, and us on the show with you for so long. So what does that mean then for the price going forward? Or is there not that, I guess people have talked about price suppression and argued that there's a lot of, entities working to suppress the price of precious metals, but is that time kind of over?
Or I would take a deep breath and go back to what I said on the previous question, that I've seen this before, and usually as we get closer and closer and we get more and more, interested in what's going to take place, it usually blows over and goes back into a normal configuration. The thing to watch for is very easy to spot, and that is the spot market, the cash on demand market. So basically what happens when you need a commodity like wheat or corn or silver, and you need it now, then we get what's called backwardation. So if silver's at $33 the ounce, if you have to have it like tomorrow, the price could be $33.50, for example. And then the next month out, it will be at 33, which is inverse to the contango. Usually, all commodities go in contango, which simply means basically it's usually like the 10-year rate. So whatever that interest rate is applied in the following months. So a year out, it's 6% higher. That's general rule of thumb. The point being is a futures contract costs more the further out in time that you go. But if you need it really badly, it goes backward, meaning you pay more now than you do in the future. So that becomes a cash market. The spot market. I need it on this spot now. So if that were to occur and it happened for one day, that's no big deal. 2 days, no big deal. 3 days, no big deal. But if it went for, let's say, 2 or 3 weeks in a row, now the market has really turned into a cash market only. The futures market certainly would have some power. It would have some meaning. It would probably be used for hedging, but it would turn into basically a cash market. If I need this metal now, and I'm paying cash on the barrelhead now, I need delivery now, that would be the price that would be setting the standard from that point until it ended. In almost all commodities, whenever that's taken place, it only lasts for a short amount of time. The amount of the commodity, be it soybean oil or wheat or silver, subsides once the demand that's more than normal is satisfied. Then we go back into contango. The months go, the backwardation ends, and things go on as normal. But that's the thing to watch. That would be the absolute proof that the market is distorted. So, the market is recognizing that silver for the delivery right now is extremely hard to find. And because of that, you have to pay a premium again. I do think that at some point, and I've said it for years and years, that there would be a point where the physical market takes precedence over all the derivatives markets. And certainly in a small scale, that is what's happening. But I'd call it a small scale because we just haven't seen it, not so much in quantity, because quantities moved out of London have been rather substantive, but not in time duration or the backwardation that I'm referring to in a way that's absolutely crystal clear. It's not yet.
So then for our viewers, what are some of, I guess, the action steps that they should be taking at the moment? I mean, it seems an interesting situation where obviously we can't give financial advice, but where retail premiums are quite low, but the spot price is much higher. Do you think right now for those who haven't gotten into the market, it's still a good time to, is there your perspective on people who maybe haven't bought gold and silver yet is right now still a good time to stack?
Yeah, if you've never exposed yourself to having, physical metal, there's never a wrong time to buy. Really, there isn't, because it's the money of last resort. And if there's so many scenarios and they're all rather bleak, but they're all fairly realistic. If you have a power outage, if you have a food shortage, if you want to go to the farmer's market or whatever, silver is the money of last resort as far as the people are concerned. You could use it as money or as a barter item if you want to think of it in those terms. And there's a certain amount that's kind of right for everybody, but you certainly don't need to put your life savings into the precious metals. On the other hand, if you don't have any, you're kind of not covering all your bases. You're not really prepared for a financial situation. It wouldn't necessarily mean bank closures or the gold market freezes up or anything along those lines. Something more of like, maybe a weather event that we've seen several of in this country and around the world. So something I think everyone should own a little. And that's the amount little is an individual choice. One silver coin probably isn't going to do a lot for you, but you have to kind of use some common sense. So I think that's step one. If you don't have any, you certainly want to consider it now, and then no matter what the price. If you're already in the market, then I think just, if you have enough holdings, all you need to do. And then if there's a shift in the premiums, you might take a look at it. And if you're fairly sophisticated, you might look at the gold-silver ratio. Say, wait a minute, I've been a gold bug the whole time. If silver's so undervalued, maybe I'm going to swap some of this gold into silver, that type of thing. But it's, again, individual choice. There isn't one size fits all. Guidance I gave you is pretty sound, basically common sense.
Yeah, and I think one of the interesting things you mentioned, swapping gold for silver, we're also seeing strange anomalies, and Andy has talked about how he's, definitely taken advantage of strange anomalies in the past with respect to premiums, where like you can swap in gold bullion, 1 ounce gold bullion right now for pre-33 coins for a 1-to-1 swap. And it's like, that's kind of interesting. Where it's like, why are these pre-33 graded, MS62 Liberties and St. Gaudens, we can right now, you can swap in 1 ounce gold bars, 1 ounce gold coins, 1-for-1 for those. And it's like, wow, that seems like a very strange anomaly right now, what's happening in the market.
Absolutely. Let's add on to that. I mean, this is getting into the minutia, but I think it's important to know. I mean, I did one too, where I actually got more for a kilo bar than I would have for coins. That's insane. It takes a lot more energy, power, time, and energy to produce a 1 ounce coin than a kilo bar. And yet under these circumstances, similar to what you just said. So if you're very tuned into the market, and, I don't talk to Andy all that often anymore, but I do talk to several dealers on a weekly basis. And these are opportunities that if you're so inclined, you want to take advantage of. I mean, if you can get a semi-rare, 1933 gold coin for the same as a gold wafer, why not? I mean, I'm not saying to swap all your gold wafers for, earlier gold coins, but certainly worth considering because the premiums usually stabilize. When they get out of whack like they are now, that's the time to take action. And then when I go back into normal premiums, those 1933 coins will have a larger premium than a gold wafer. It's just the market gets these distortions as we're discussing. The other one real quick is the bag market. I mean, usually a junk bag or constitutional silver sells at melt or a slight discount. That's what you can buy it for in many cases. But in certain instances where people are really worried about the barter value of silver, such as Y2K, for example, I think a 40% premium on bags. And that's where you should swap your bags into silver bars, for example. So these anomalies do come up within the market itself that you can take advantage of.
Definitely. And I guess one last thought, I know one thing that people consider as well is that they always want to, when we have guests on, they want to find out where they can find the guests. So themorganreport.com is where they can find you. What can our viewers find you there? And I know you recently, I believe, put out a new documentary or that's coming soon. So tell us a bit about that.
Thanks, Elijah. Yeah, the main website landing page is themorganreport.com. We have a free service. You can sign up for that. If you're interested in a subscription service, you can pull the tab down and learn about that. And then I've been working on the silversunrise.tv documentary for well over a year now. All the filming is accomplished. We're editing it together, and I'm hoping to have it out probably by mid-year. And you can watch a lot of trailers. There's trailers with G. Edward Griffin, Foster Gamble, Edward Vieira, myself, Web of Debt author, slipping her name right now, but many people that are in the documentary, we have trailers on them, and you just see those at silversunrise.tv. And I'm kind of anxious to get this completed and get it out to the public so we can get some feedback. And then, hopefully you can watch it and we can discuss some of the points I'm trying to make in this film. But it really is about overcoming the power and control and stress of money, and why we, and speaking for others, of course, but generally speaking, people really stress about money because they don't have enough, or they haven't saved enough, or it's too hard to get, or inflation's taking away their purchasing power, and on it goes. And we address some of those things in this movie and talk about not only the problem, which is how the banking system was set up, but what some of the solutions will be.
Thank you so much, David, and God bless.
This is Kaiser Johnson with Liberty and Finance. Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty or St. Gaudens with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for MS62 numismatic Liberty or St. Gaudens at no extra cost. Call us for details.